Good afternoon and welcome to this week's video with Bill. Thanks for coming, Bill.
Well, glad to have you back. I mean, I know it's not midnight, but will you be okay with the time?
It's good to be back. So, markets have been pretty slow recently.
Yes.
Is this going to be an ongoing theme for markets now that we've slightly come out of the doldrums with global economies? Are we now also better now? Is the market's going to remain gradually going higher and being a bit boring, or can we expect?
Well, I think, if you're looking for something like to go up 50%, yes, it's going to be dull and boring. What I think you're going to still continue to see is, an improving global stock market. Okay, again, it'll probably be rotation. I know, listening to a couple of the analysts, yesterday and today, talking about the only stocks that seem to be moving in the U.S. are tech stocks. Well, they probably didn't see how Lufthansa did yesterday when they were going down 14%. But yes, I think it's going to be a situation. But one of the things that I'm interested in, and we look at the euro. We have to go back maybe to March and to May of 2013, when Bernanke said, yes, be prepared, we're going to start tapering, and then when he began in May. One of the things that we saw was an artificially strong euro dollar, but my feeling is it wasn't a reflection of euro dollar, it was selling of Poland, Hungary, Estonia, the Czech Republic, and Turkey. So that, therefore, they were selling those emerging market currencies to go into the safety of the euro, which of course then artificially lifted the euro up. Now, conversely,
So is that the reason the euro's performed so poorly? We just recently put the interest rate cut aside, so it's dropped from 139 to 135 now,
yes,
and cable stay pretty much where it is.
Yes.
Is that what that is? Money going out of the euro?
Yes, it was. But here's how it was being done. The market, after, I guess my feeling and the March feeling was that the euro had to do something, or the ECB had to do something. Well, they didn't do it in March, and they didn't do it in April, and of course they did it early this month. But now, what I see is, again, a rotation, but the rotation is in the bond markets, okay? Because what we've seen is Spanish yields, Italian yields, even Greek yields, but especially Italian and Spanish yields, they're like at a 4-year low versus the Treasury 10-year, where they've gone down. Treasury 10-year is now 265. So that's what you're seeing right now. That, to me, not the rate cut, so to speak, but that, to me, was the reason why we saw the euro, again, head down towards the 135 level. But we're not seeing it move any further. I think the last I looked it was 135.25. But that was the rotation, okay? It was out of emerging market currencies, which lifted it up. It's taking it down with the bond markets, okay, where people now, the rotation, not the rotation which we normally would see, stocks to bonds, etc., etc. This was a bond to bond to bond rotation.
Okay. In the UK, we had some great, more good employment news. Just seems to get better and better over here. People are talking about a rate hike next year.
Yeah, I've had to move that in, okay? If you want to say, I don't know whether I should officially move my rate hike from February of 2015. I was talking December. I think we could get it as early as November, but people looking about sterling, I think it's 7 p.m. tonight. We have Governor Carney along with Chancellor Osborne speaking at the Mansion House. Now, this is normally a prepared speech in reference to interest rates, but it'll be interesting to see next week when we get the minutes, okay? And we got the incoming Deputy Governor Broadbent. I was already talking about, he is getting concerned about the housing bubble. Now, I know we've had a reduction in mortgages, applications, etc., and I know, London is not the UK, but the question is, how will that affect the voting? And as I say, next week we will get the minutes of the Lisbon. But as you say, the data. Yesterday's unemployment numbers were unbelievable. What is it? 30.5 million. We have the highest number of employed people, since Queen Boadicea was around in 42 BC or some kind of nonsense. So now it's a question. But one of the things that I looked at, and I know the bank will be looking at the same thing. Officially, inflation is 1.9%. But really, we only had a 0.9% in wages, okay? And that has got to be very worrisome, because what we're seeing is what consumer-led recovery is actually either being taken out of savings and or a massive withdrawal. Now, in ISIS and SIPs. Now, was that in preparation of the new change that comes in, what, the 1st of July? I don't know. But that's the question that everybody's concerned about. Excuse me, is the consumer-led recovery basically being taken from savings rather than income?
Okay. Let's touch on what's happened in Iraq today. I mean, I don't know a huge amount about it, but I suspect you'll know more. The oil price has also shot up a couple of dollars. Is that warranted?
Yes, I think it is, because the interesting thing is going to be is this was the same initial reaction we had with Ukraine, but with Ukraine it sort of lasted, I don't know, 2.5 hours, 3 hours, whatever. Now this is very serious because we're talking about a situation, you know, for you youngsters. It all started in August of 1990. You know, with Desert Storm and Saddam Hussein invading Kuwait and stuff like that. So this is something that's been going on for almost 25 years. And I know we can talk about the U.S. fracking and all this kind of stuff, and, you know, there's not going to be any need. But as you just said, I mean, last I looked, you know, Brent was over 112, up $2 on the day. We've had gold now up $12, $13 just in the past 48 hours. So the market to me now is saying this is far more of a global problem than Crimea/Ukraine/Russia, because this has always been a real hotbed. Now, one of the things, and I may be overreacting here.
Is that because it brings the US into it more?
Yes, this is exactly what I was going to say, because one of the things, you know, Obama made a speech about 5 years ago, sort of saying, yes, the Middle East is important, but, you know, now that we're fracking and this kind of stuff. But remember, I mean, the Middle East has been incredibly important for like 100 years. Now is in a situation where, you know, hey, this morning said basically no matter what's happening, we're not going to send troops back to Iraq. But one of the things we may have to look at is, you know, NATO, I don't know whether NATO was or is going to have a special meeting on what they're going to do about what's happening there. But remember, there is a serious problem with Turkey bordering both Iraq and Syria, and the number, I mean, the tens of thousands, excuse me, of immigrants who've migrated into Turkey. Now, one of the things is that Turkey is a member of NATO. And one of the things you can do, you know, not that I've read the NATO treaty as often as I should, but basically, if there is, I want to say a red zone, a danger zone, etc., one member of NATO can call like a special meeting, like the United Nations, and say, hey, guys, you know, you know, this is serious going on here. Now, will that predicate? I think that it could predicate a UN type of operation, okay? Now, whether that has any meaning or not, but I mean, this has far more serious long-term, or let's say intermediate and long-term repercussions on the global growth economy, you know, that Crimea/Ukraine had.
Okay, just before we come on to your World Cup predictions, there's, you know, yesterday was the first day in a while where everything started moving. It was a bit jittery in the markets, certainly from where I was sitting. Is there anything to be fearful of, or are we, you know, markets are all very safe at the moment, volatility is so low. Yes. People need to be worried?
No, I don't think so. I think one of the thing they have to look at is that, well, let's just say in the UK. Now, up until a month ago, or say 2 weeks ago, I don't care who came to market.com, an IPO, everybody was going to buy it. Then all of a sudden, you know, we had Pets at Home and Boohoo, and then maybe it was Saga. All of a sudden, Saga, the talk was 185 to 245. It came at the low end of the spectrum, and I mean, it still hasn't seen the light of day. So now, if people just sort of say, well, the IPO market's not out, but one of the things you'll probably continue to see is rotation. Now, one of the things that we may have to look at, and we may have to wait to the end of this month, okay, when we start looking at second quarter earnings. Will we be looking at earnings per share? Will we be looking at EBITDA, et cetera, et cetera? I don't think we have anything to worry about, but I think people, I don't see them taking money off the table, but the question is, we'll sort of, I don't know how you say, sell in June and, you know, then do a swoon or something like that. But we didn't see the sell in May. But I just think we could be in for June and July being a rather dull, boring situation. You know, we expect the Federal Reserve next week will say, yes, we're seeing moderate to modest growth. We will continue, quote, tapering as is. And then there's going to be a situation where, excuse me, will we now have to look at reevaluating U.S. growth, okay? we start, we can't keep blaming it now, days like today, on the cold weather in January, February, March. That was a long time ago. So my feeling is, we were concerned about Chinese growth story. Well, that seemed to improve slightly. I think I don't see people selling the market, but as we all know, being brokers and dealers, etc., I can't see, unfortunately, getting it any more exciting, okay? I don't see the VIX index doing anything. Again, we're talking about volatility in the 70 low. I don't see that changing at all. I mean, the only great day we had in the euro was last Thursday when it dropped. It went up and it dropped again. Now it's a situation where, you see sterling. Now sterling has improved, but is it back to 169, 170, 171? I know there are one or two analysts out there saying, well, gee, now it's just a question. And these are one analyst who says we could see a rate hike as early as October. Now, has that already been priced in, where when Carney this time last year, or last July, was saying no interest rate hikes anytime soon, everybody said, well, Mark, we don't believe you. We think it's going to be end of this year or first quarter. Now, we do know now that there won't be any problem with the interest rate hike coming anywhere close, or closer or near to next May's general election here in the UK. So it's going to be a situation where I think you will be more political tonight, so I don't think we'll take anything away from the Manchin speech. But I think the market now is saying, well, we are expecting an interest rate hike. Excuse me, I think the last dollar was at still 168. I mean, we weren't at 169, we were close to 170. So now it's going to be really a situation where, the market, ought to take a breather tomorrow, thank you very much, with this kind of weather, everybody, come down with sort of, who knows what kind of fever, and all be down at the seashore. But we will definitely be looking at the implications of what is going to continue to happen in Iraq. But it may be quite interesting. Our savior in Iraq could be our old enemies, Iran, because Iran now things are starting to work out. They're starting to, quote, get with the program. But that'll be very interesting. But another thing, very briefly, is as we see with President Obama, it's been a difficult 6 weeks first with the head of the Veterans Administration resigning, and people saying there were a whole bunch of veterans, something like 1,000 veterans in Phoenix, Arizona, which was looked like sort of Greater Staffordshire Hospital or something like that. Then, of course, this situation with Sergeant Bergdorf, is he a nutcase or isn't he? Okay, and then him deciding that he was going to do it by himself. And then this situation yesterday with Eric Cantor, okay, not Bernie Cantor of Cantor Fitzgerald, but Eric Cantor, who was the House leader, okay, losing out to a Tea Party. And I mean, there was one editorial in the Times today, or excuse me, in London newspapers today saying, is the U.S. now in a freeze zone until the new president comes in January 2017, okay? So all of a sudden, this saying, can the U.S., are we going to have another fiscal cliff? Are we going to have another this, that, and the other? So, right or wrong, it seems like what's happened in the last 48 hours, whether it be Eric Cantor from the state of Virginia, or Mosul heading toward Tikrit, toward Baghdad, etc. Everybody's sort of saying, well, maybe things are a little more serious than we thought. So we'll see what happens. I mean, the last I looked, it looked like, the futures, at least in the States, looked like it's going to open on a better footing. But unfortunately, we may go up, we may go down. But I'm sure you said this on television. I think it's still going to be very dull, very boring, and it could be watching way down into you for a while.
Trade the range.
Yes.
All right, brilliant. Thank you very much.
How about your passport? You got it? Are you ready for your holiday?
Thanks for that.